We are seeing the rebound in oil prices. Sue, what's going on?
Well, as you mentioned, we're seeing a slight rebound. Oil prices, West Texas Intermediate, just at the $87 level, but it was the decline in the New York trading that really set off some alarm bells. We did see West Texas Intermediate fall and close below 87 at a 6-month low for the first time in a long time, and that was on a very volatile trading day on low volume. And we should point out the low volume, which is typical of late in the summer here in New York, does tend to exacerbate price swings. But it's definitely in reaction to talks between Iran and the EU, which are negotiating and signaling progress toward a potential nuclear accord that would put more oil on the market. So bearish economic data is also something, as you can see, that's been bringing the price of oil down, dropping into the Bloomberg. You can see we've broken below key support. Bearish eco data has really been the driver in addition to this Iran element, and that's a result of the threat of recession as well as Chinese lockdowns. There are some analysts say that is what could keep the price of oil well below 90 going forward.
So we know that there has been progress between EU negotiators and Iranian negotiators. What difference would Iranian oil make to the global market?
Oh, that's a great question, because removal of the sanctions or even modification, oil watchers say, could put an additional 1.3 million barrels a day of extra supply on the market. And that's significant. A lot of the trading activity signals that there is an easing of the tightness that had really driven that huge run up above 100. If you look at the spread, and we're looking at Brent crude right now, traded out of London, the spread between Brent's December 2022 and December 2023 contracts, that's called the forward curve, it shrank to the lowest since February. Again, that's a technical signal that tells us a lot about trading sentiment, and trading sentiment is that the supply tightness is indeed easing.